Hello, ladies and gentlemen. Welcome to Triple N Media. I am NIK NIKAM. Today we're going to look at the AMC stock and the great anticipated gamma squeeze on Monday. Let's see if that's going to turn out to be true. It never hurts to look at from various different aspects and see how you can avoid from getting slaughtered at the stock market on Monday morning. Here is a chart showing the price along with the stochastics. This is a 10-day chart. It was sort of having a baseline around $5.60. Then all of a sudden on 24th and 25th, it started to go up. And 25th, it had an explosion going all the way up to $11. And from then onwards, it just, as soon as it hits a high, it begins a sell-off, and the same thing happened on 25th and here on 26th. And and of course, a majority of the options for February 26th expired on Friday. If you look at the AMC option chain, starting from $1 to $8, this is March 5th. But the picture was similar to that. I just want to bring your attention to the open interest. At the end of February 26th, Friday, that was yesterday, in the money options total to more than 20 million shares. So keeping that in mind, let us see what happens here on Monday, where if all these people were to exercise their option, that means whoever sold them the options will have to buy the stock in the market and give the stock to the person who exercised the option. Or if it was the market maker who sold those naked calls, then they will have to go and buy the stocks in the market. All the geeks think there's going to be a sudden upsurge of volume on Monday morning, but let me a different perspective and explain what's going to happen. Let us say 20 million shares have to be bought, and all those people who buy the stocks are probably going to turn in and sell it so they can make profit. As a result, several things are going to happen. Number one, the price is going to go up. But remember, the institutional investors can buy these stocks much earlier than you can in the open market at 7 o'clock New York time. So they could cover their positions before the stock rises astronomically. So the institutional investors are fairly protected in that respect. Number two, if you are an individual investor and trying to jump into the action on March 1st, this is what's going to, most of the rise may already be covered in the price. So that when you try to get in the market, you probably are trying to get in somewhere around here. This is a hypothetical situation. And what we're going to see is another typical replication of a wave similar to this one. So what does that mean? And is there a chance for you to make money? The way I look at this, I don't know if you can make money. I'm just an individual investor trying to analyze and see how the stocks behave. I'm more interested in the psychology of stock movements, technical analysis, not so much about the price. Let's say 20 million shares come into the market, and what's going to happen? The prices are going to go up. When the demand for all the stocks is gone, then suddenly there is no more pressure to buy stocks. Then we have the momentum investors who are going to jump into the market and join the play. Whereas the institutional investors, once they see this opportunity, they can shorting the stock. When they start shorting the stock, automatically the prices will keep coming down. All these individual investors who exercise their stocks, they want to sell and make profit. And when there is more selling pressure, automatically the stocks are going to keep coming down, 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 down. I mean, that's my hypothesis. So can you make money? Most of the time, by the time you have heard the news, it is bad news for individual investors because we are on the wrong side of the the big money, as they call it. So one way is, the way I look at it is, when it hits here, either you can short the stock. What you can do is maybe buy options, or maybe out of the money options, and you probably don't lose much. But at the same time, if it takes a nosedive like this, you may make a few pennies. That's what I think. So let's look at here what could help on Monday morning if we are looking. Of course, there's already so much interest here in the March first week options. And if you think it's going to jump up, you may be too late, because we are, as I said, we are always at the tail end of the whip, and we are going to get hurt the most. So the way to look at it is, this is a contrarian view, so don't take my word for it. What I would do is, instead of calls, I would go to puts and look at the number of puts here compared to the calls. If you think the stock jumps up to $20 or $30, that may be something I would consider investing in. Money that I can forget it. Like you go for a dinner, you spend $100. Okay, I'll just put it on puts here. So let's look at it. A put on March 8th, $8 put on March 5th expiration. The value is like $1 where market close. And if you were to buy a put for $1, that's an assumption. If the stock opens at $20 in the morning, and if you buy a put at a strike price of $20, which may be $1, or because of the volatility, it may be much more expensive. But nonetheless, if there is, when all the buying pressure is gone within the first few hours, because if you look at the volume traded, 171 million, here's the number of shares traded, 137 million. So this 20 million will be covered in a very short order. That means once the buying pressure is gone, then the selling pressure begins when everybody wants to cash in their stocks and then turn it into profit. That's where I think I may be looking at, wait for the market to reach a peak, and when all these technical indicators are showing some signs of overbought, then maybe I may be more looking into like putting $100 or $200 in puts, and bingo, if it keeps coming down, you make the profit. If you can't make the profit going up, you can make the profit coming down. You have to have an intelligent contrarian approach, because you're willing to lose. Okay, if you buy two options, that's $200, and you may make profit. If not, no big deal. We learn from our failures. What do you think? You want to buy the stock, or you think when it hits the top, we don't know when it's going to hit the top, you think we should buy the puts? The reason I'm saying is, this is an unusual temporary phenomenon. This is nothing to do with the fundamentals. There's no good news here, except that everybody knows there's going to be a gamma squeeze on Monday, and this is going to be a temporary phenomenon, because, as I said, 20 million shares is not a big amount compared to 200 million shares traded as far as AMC is concerned. Let me know what you think, and please do subscribe to our channel. We will see you next time.